Welcome to the New York State Association of School Business Officials webinar entitled New York State ASBO's Detailed Analysis of the Government's Budget, a complimentary webinar for New York ASBO members. Your speaker for today's program is Stephen Van Hoosen, Director of Government Relations at New York State ASBO. Operator assistance is available at any time during this conference by pressing #. A question and answer session will follow the presentation. You may send chat questions at any time during the presentation using the chat window indicated by a speech bubble icon located to the right of the presentation. I'll now turn the call over to our host and speaker. Steve, please begin.
Okay, well, thank you very much. And as Michelle said, my name is Steve Van Hoosen. I am the Government Relations representative from New York State ASBO, and we are pleased to be able to provide this session to our ASBO members complimentary. It's one of the things that we are trying to do going forward, that our public policy related webinars and information that we want to get out are complimentary to members, and that leads right into the fact that we have a series of sponsors that we want to thank that make this available to our members at no cost. So I think on the screen you can take a look and see the number of companies who were generous enough to provide some sponsorship funding so that registration was at no cost to our members. You can look through the list here: Benetech, Bernie Donegan, Capital Markets Advisors, Capital One Bank, Hilliard, Biscock Barclay LLP, Municipal Solutions, New York Bus Sales, NILAF, the New York Liquid Asset Fund, SWBR Architects, and we have a couple of little slides here I want you to take a look at for what they've provided so you can get an idea of what they do for the school districts. And please keep in mind that they are there at your service for a significant number of products and services that help school districts. Okay. Well, what I want to do, actually, before I get into some of the executive budget details regarding what the cuts were, what they did to the formulas, and what some of the impacts are, I would like to introduce Elaine Robinger. She is with the Division of Budget, who can specialize in talking about some of the budget changes that were proposed, particularly dealing with STAR, and she can answer our questions. And I would like to go through this piece of it because sometimes the STAR gets kind of left out of the discussion of school aid, but I think for business officials it's extremely important to understand this. I'm going to ask Elaine to do that, and then once she goes through her discussion, then I would like to open up to questions for her and for the panel, and also to have people submit some questions that we might want to go through to talk about this particular piece. So, Elaine, are you there?
Yes, I'm here.
Okay. So, if you're ready, I would like you to begin.
Okay. Well, thank you for the introduction. As Steve said, my name is Elena Grovinger. I work in the New York State Division of the Budget, and I'm a STAR analyst. So we have 3 proposals in the executive budget, and 2 of them are legislative proposals, and 1 of them is administrative action. So for legislative proposals, the biggest one is to cap STAR exemption benefits at a 2% growth annually. If some of you are familiar with STAR, it's calculated by the formula. And back in 1997, when the STAR program was enacted, there was a provision within the formula, which was floor, that prevented large drops in the exemption benefits. But what happened was lately we've seen that exemptions have been increasing, and this is mostly due to the market value drop. Part of the STAR formula is equalization rate, which is the ratio of assessed value over the market value. So market value historically has been increasing. That's why the exemption benefits have been decreasing. But in the last couple of years, that's opposite. Now we're seeing that the market prices are going down, which means the exemptions are going up. As a result, the exemption benefits are going by they increased about 8% on average for the statewide, and it has nothing to do with the property tax bill. The tax rate is also important, but it hasn't really contributed that much to the increase in the exemption. Therefore, the proposal in the executive budget is to limit this growth in the exemption benefit to 2% annually. And we estimated that it's going to save approximately $125 million for 2011-12. There is another proposal, which is a small proposal. It's about $100,000 in savings. But that's basically for those taxpayers who have multiple homes but receive more than one exemption, more than one STAR exemption. They can go back to the assessor and basically tell them, yes, I was receiving this exemption improperly, and I would like to give the money back to the state. And finally, the third proposal, which is we don't need legislation for this, it's audit STAR recipients. So right now, Tax Department has been putting this data file together, the matching property tax file with the income tax file, to see how many people make above 500K. During this process, we're hoping to find some of those taxpayers who are actually claiming more than one STAR exemption, and that's what this piece is. We estimated that we're going to save about $50 million annually starting in 2012-13. So basically, those are the main proposals we have, and if you have any questions, I'll be happy to answer them.
Yes, if anybody wants to jump in here on the comments, we can deal with the. I'm looking through our online comments. We had one question submitted here. Says that the cap on the value of the property exempt and not on the value of the exemption.
2% cap is on the exemption. So let's say last year taxpayer got $1,000 in the STAR exemption. So going forward for the upcoming year, the maximum that this taxpayer can get is $1,020, which is 2% of the exemption, not the exempt value.
That's what you're saying. You can only get a 2% increase on the STAR savings then, right?
That's right. And that's the maximum because, again, we're using the formula. STAR is going to be calculated by the formula that's in law, and then we're just going to apply 2% cap to the exemption itself, to the exemption benefit.
So in any property tax above 2%, there would not be a STAR benefit following it.
That's right.
Well, that's interesting. So that if the tax impact could be a certain percentage, but the actual tax bill may be higher because the STAR exemption is not following it.
That's correct.
The whole way.
But even right now, I mean, the STAR is kind of a fixed value.
Right.
Okay. One of the things that we're getting some questions about is that The PowerPoint presentation will obviously be made online, and we will extract the information that we have from our panelists that don't have a presentation, that we'll pull all that together and make it available for everyone after the conclusion of the webinar. We can open up the phones if we can. Michelle, are you there? I'd like to see if anybody has any questions that they want to ask Elena right now, if we could do that. Is that possible?
It is. Ladies and gentlemen, if you'd like to ask an audio question, please press 7# on your telephone now. You'll be placed in a queue in the order received. Again, 7# to be placed on queue. We do have a question from Lawrence Central School.
Thank you.
Caller, go right ahead. Oh, and she stepped out. Again, 7# to be placed on queue.
Well, in the meantime, we do have another question regarding this from William Malloy. What about the star reduction? 2% max reduction?
There is no real reduction. It's actually going to be 2% increase. So the maximum increase that's allowed for the star exemption benefit is going to be 2%.
And we do have William Malloy on the audio queue as well.
Okay.
Hello, this is Clarkstown School. So it can only go up by 2% max. Can it then also only go down by 2% max?
No. Basically, the answer is no. We have the floor provision, which is 89%, so it can still go down, but it can go down by up to 11%. And this 11% is not actually the benefit itself, is that the base figure. So when we take $30,000 and multiply by different parameters, then we apply 89% to this base figure. And then we apply the tax rate to calculate the benefit. With 2% cap, 2% is going to be applied after the benefit is already calculated.
Right. I understand the calculation on the increase. So 2% ceiling, no floor, or I guess the floor is 11% on the base amount, and then depending on what your tax rate is.
That's correct.
The rest of the calculation will hold true. Okay, thank you very much.
You're welcome.
Oh, are you still there?
Yes.
So, again, Clarkstown, I apologize. Any perceived changes or upcoming changes in the other part of the calculation, how the assessed property sale value?
Yeah, sales price differential factor?
Yeah, the differential factor. Are you changing any of your methodology for determining that?
No, formula is not changing, no.
Okay. All right, thank you.
Yep.
Thank you. No current questions on the audio queue. Again, 7# to be placed on queue.
Okay. Bill Nemo has typed in a question here. It says, effectively, this means that the homeowner's tax bill will increase as it had in prior years when the assessment market value ratio was reversed as in past years. Elaine, is that something you can address?
Well, if the star benefit is decreasing, then probably, yes, that's correct. The bill is going to go up unless the school district change the tax rates or wherever gets put into the tax bill.
Okay. Another comment is, am I correct? There is no impact to the school budget because STAR is part of the tax levy. Rather, the impact is to the taxpayer.
Yes.
That would seem to be a yes.
I would agree. I think that's a yes.
Mm-hmm.
And I think Anthony just typed in and he agreed.
Yeah, I got
Yes. Okay. Question here, will the full amount of the STAR at the state level be paid to school districts next year, not 98.9 as it was in this year?
That's right. FMAP reduction of 1.1% was only effective for 2010-11.
Okay, that seems to be pretty straightforward.
And that's also applies to the general FMAP reductions on all the state aid payments that are going out. That is just a 10-11 factor at this point.
Right, and yeah, it's beyond STAR. It's all the FMAP stuff.
Mm-hmm.
It was only for this current year.
Mm-hmm.
Okay. All right. Elaine, can you stick on the phone and just listen to the rest of the conversation that we have for the rest, for the next hour or so, in case something else pops up?
I'll be around for the next half an hour.
Okay.
That's okay. So if anybody has any questions, I'll be here.
Okay.
Okay.
Okay. Well, we thank you very much, because I think this is one of the things that when we start talking about school aid and the impact is that we don't necessarily sometimes focus on some of the peripheral issues, and obviously how STAR impacts school districts is very important. So I appreciate the fact that you were willing to come on and talk about the three changes.
Sure, you're
and
welcome.
If there are any other additional questions that come up after this, we'll try to make sure that we get them to you, and then get the information back to those who are on the conference call.
Sounds good.
Okay. Thanks.
Yeah.
Moving into the executive budget, as we've known, as we dig into this a little bit more, the details of what looks like a fairly straightforward and understandable cuts to school aid in terms of the structure of it, take on new meaning when you look at the impact of the volume of those things, and what districts are able to do or are not able to do as they try to put their budgets together and look at this and be able to explain how what the governor has put together here affects their own school districts from an advocacy point of view, and trying to get the attention of the legislature for what is appropriate or not appropriate going forward. So much of what I'm going to just talk about quickly here are some of the overview pieces of this, and then hopefully we can have a discussion about some of the more details. As you're very well aware, that for the formula-based aids, that the governor cut those by $1.5 billion or 7.3% from last year's levels. The multiple formula-based aids are frozen at the 2009-2000 levels, and they include foundation aid, reorganization operating aid, high tax aid, universal pre-K, academic achievement grants, supplemental education improvement grants, and academic enhancement grants. Now, within those formula-based aids, there are some that are running on current formula. And when you look through the budgetary documents, you see, one of the things in what DOB does for its descriptions is they kind of show column by column what the changes are in the formulas, and then whether they're operating on the same assumptions or they're eliminating things. But for the ones that are currently on statutory, and they're running according to what the formula is driving, is the excess cost aids, both private excess cost aid, public excess cost aid, textbook aid, computer hardware, computer software, library materials aids, and you can where some of this is driving what you would expect based on current formulas. And one of the things that I'm trying to do as we look at this is monitoring the chat column that we have here to see if anybody's jumping in for questions about the questions as we go along. And I'm going to just jump in here with a comment from Joe DeGrone is, boy, I'm looking forward to buying textbooks this year. And I understand where Joe's coming from this point. We look down, is ASBO analyzing the obvious inequities of the state aid cuts after further widening of the divide between low and high wealth districts? And the answer to that question is yes, and that's something I want to get to down a little bit further. Within the formula-driven aids and BOCES I want to have a fairly significant conversation about this piece, because I think it's one of the areas that, while they didn't make too many changes to how they're funding BOCES programs now, that next year there are significant pieces of law that were modified in the Article 7 bill that would remove the BOCES, or what is entitled for BOCES aid, and there are a number of those types of things that are out there. And like I said here, a wide variety of services currently provided to component school districts, and I witnessed through the BOCES listserv and these types of questions, and I know that districts are trying to go through and look and see what the services that they would consider purchasing would be eliminated from aid. And maybe, I don't know, Steve, can you talk a little bit about what some of those things are? I know that even if you list the things that were in law, which I provided around to the through their listserv, I think some of the insurance issues were, somewhat uncertain, but if you could kind of talk a little bit about this, if you won't.
Yeah, I'd be happy to. Look at it. Generally, it's non-instructional items that would not, they would have no boat starting with the 12 aid year and thereafter. The things we've been able to determine so far, we have a partial list at state aid planning, is collective bargaining, negotiations and labor relations, personnel services and recruiting of employees, employee assistance programs, business office services, including competitive bidding, coordination, payroll, microfilming, non-public school textbook service, business manager, business office support, Medicaid reimbursement claiming, telecommunications, probably telephone interconnects, insurance management coordination, and probably any kind of employee health and benefit coordination. And there's another one, I'm not sure exactly what this means, but it says both planning and management services, public information coordinator and public information services, school food service management, coordination of extracurricular activities, including interscholastic sports, coordination of finding substitute teachers, so probably like substitute, brokering and call-in, instructional graphics, equipment repair, printing, photocopying, educational television, non-print duplication, energy management services, GASB 45 planning and valuation, and I think engineering services. I think in the business stuff, state aid planning would probably be included. So those are the lists we've been able to put together so far. So we're trying to come up with as comprehensive a list as we can based on what seems to be in the law, in the bill.
Yeah, I mean, these are pretty much right out of the Article 7 bill that kind of runs through the entire list of those types of things. I know that there had been some additional questions about that. What I would like to do is, again, Michelle, if we could open up a phone line right now to talk about BOCES aid and find out what some of the questions are that people might have. So if we could have people dialing in and ask those questions directly.
Actually, Steve, before they do, probably something I think also worth adding on BOCES is the aid ratio change. I don't know if that's on your next slide or not, but.
It's not on my next slide, but yeah, that's one of the immediate changes is that is a change to that the ratio would be basically the foundation rate.
Right. They want to go to using for administrative and shared services foundation aid state sharing ratio, and they also would like to change the minimum aid ratio. Because right now, the minimum aid ratio for administrative expenses shared services is 36%. Under this foundation sharing ratio proposal, the minimum would go to 10%. So it could be quite significant. And where it will probably have the most impact are districts that now have what's called the millage ratio. There is a current option for administration and shared services, the greater of what's called a millage ratio or current RWADA, or resident weighted average daily attendance aid ratio. Typically, for what are generally fairly wealthier districts that have a low RWADA ratio or even a zero RWADA aid ratio, when that gets calculated, often that millage comes up higher. And so that would disappear. It would just be foundation state sharing ratio. So this could have a pretty significant impact for a number of districts. If you're extremely, probably, extremely low wealth, high need, probably for some foundation state sharing ratio might actually be higher, but it would be a limited number that would see the aid ratio increase.
Yeah, I think that would be smaller.
Much smaller.
Right. We're getting some detailed questions in here about the BOCES, and let's see if we can address or knock some of these things off at the present time. Can we link the Article 7 bill so that we can see a list of all these BOCES services? I do know that on the BOCES listserv, that question had come up. If you participate in that, and I know that I, in addition to a couple of other BOCES people, had pointed out and basically copied and pasted, from the Article 7 bill, what those services would be. And I know that there's also some questions about, particularly in the area of insurance, is how how that's going to be defined, and unfortunately, I don't think that we're going to be able to know that until, much later on in the process, if in fact this bill ever got passed. I'm trying to look, is the BOCES COSER 4740, the safety risk management included in the non-instructional services that would not be aided? I don't know, Steve, had you seen that?
We didn't see that, at least what I remember in the bill.
Yeah.
But I would think if you interpret it as non-instructional, that could very well be one that might.
Yeah, I think a lot of these things are going to come up to interpretation at SED based on the way the law is written. If in fact that this is actually part of the budget bill that actually got passed, implementing some of these changes. Is SED aware that the database used to project BOCES aid is over-projecting BOCES aid on the executive budget by a substantial amount? I don't know if...
It will change with the February database.
Even
2010-11's BOCES aid we saw last year went through some changes in certain areas of the state. So... yes, that is, whether it's up or down, it will change from those numbers.
Yeah, it certainly can change, because right now everything is based upon whatever was submitted in terms of estimated expenses for school districts by BOCES to SED, and that was the submission by November 1st of 2010.
Yep.
So, yeah, there will be an updated database that would be used for final aid projections, presumably, so the projections would change. I also do know that there have been some issues with the projected expenses around the state. I think one BOCES in the lower down below us in the Hudson Valley sent something out to their district saying that specifically we believe, that the projection data is wrong for our components, and sent them a list of what they think the actual 11-12 projected BOCES aid will be. So there have been some problems with the numbers, and I think maybe a part of it is also the fact that it was the first year BOCES ran through SAMS.
Mm-hmm.
They used BOCES because it's so complex. Up until now, they used what was that old data entry assistant that was DOS-based. And this was the first year, so I think there have been some wrinkles that way as well. So I think there are some issues depending on the region of the state and where some problems with the projections. I wouldn't say they're universally all high, but
yeah, I would
there are places where they may very well be.
I would expect and hope that that those wrinkles get worked out over time. Given the proposal that's out there, and that the role that SED would be playing in trying to make sure that these things don't create bigger problems than what I think the executive proposal would have hoped.
It might actually expand it with the fact that now the freeze on the database means that what is listed there is the maximum it could be. And I guess individual districts, if they're thinking of making computer purchases through BOCES in the second half of the year, there's a real question as to whether those aid figures could ever go higher than what's both for 1011 and 1112 in any of those categories. So that's another thing that's highlighted by the fact that these database numbers normally change. Things aren't completely processed, but yet you're now going to have a hard date that we're going to be locked into potentially.
Well,
that actually is a very, very good point, at least because what in the bill does presume to, as you say, limit total aid that would be payable to what shows on these runs, both 1011 and 1112. So yeah, if the BOCES projections were high and the aid actually comes in lower, it might give a little bit of leeway for something else to go up. But this is a two-edged sword because the other side of it is that the Gap Elimination Adjustment, the reduction, is calculated on the aids that show on that listing for 1112. And if those are high, then that's making the GEA higher than it would be otherwise. So you got a double-edged thing here.
Yeah.
There might be some leeway on the total projections if they're high, that you get some growth in aids. Yeah. But if it turns out that they lock it, and we check the language today, at least the way it's written appears to lock the GEA on the database that was used for the executive budget. So.
Yeah, I mean the way they've done this is they've created these internal linkages which have to be understood. Michelle, I think we have a question from the operator.
We do. Our question in line is from MHRIC Ulster BOCES.
Hi. My question is, when it says that payroll will no longer be aided, what does that mean? Is that the BOCES payroll itself? I run a department at the Regional Information Center. We're the Financial Services Department, and we support software, financial software, in my particular department. And I was wondering if that was going to be affected or not, or if you even knew that.
It seems like it very well could be, because whether they're producing the checks at the BOCES or you're just providing the ability for them to produce them in-house, that's still a BOCES service for payroll. So
not instructional.
Right.
It's not instructional. But okay, so here's my question. We support a full financial package, including accounting and everything else. Mm-hmm. So I'm not sure what it means by just payroll.
I think all those units would be. I think the full financial support functions would be unaided under this proposal. What do you think, Steve?
I would think that probably would be the case. And one of the things I have to admit that I don't know right at the moment, I'd have to go and check, is in looking at the language, because sometimes the way these bills read, they say, including but not limited to. And if that language is in there, then you got pretty broad interpretation of what's not instructional.
Yeah, and I think that's one of the things that keeps the anxiety level up about these. Well, not not excluding other things, and I think that's where we have to take a look somewhat at these things as broadly as we can, as they put them in the law for what wouldn't count toward for BOCES aid and the services that are being provided according to this governor's proposal. I think it also has a good reason to have a fairly strong advocacy piece of this to be able to demonstrate how what services are being provided to districts, even with aid, are helpful to those districts and allow them to maintain a level of efficiencies within those districts that otherwise that they wouldn't have. That these things would just shut down. There's no other options for them, and that's why I think this BOCES piece, particularly for out-year services, and how contradictory it is from what we've been hearing over the last couple of years as far as BOCES' role in providing efficiencies. we're still trying to figure out here whether, this is one of those areas of the budget that is looked at as being kind of a throwaway, where we know we're going to bring this stuff back, but we wanted to hit it to basically make an issue out of this, focus attention on this, and be able to talk about some of the other significant areas of aid cuts throughout school districts. So I guess my point here is to, look at this as broadly as possible, and to be able to make the case within your BOCES and within your component school districts as to what the impact would be if you had to eliminate these programs, and that districts wouldn't have options for these. And that's one of the things that I think we, have to highlight as we talk about this executive budget proposal going through over the next couple of months.
And Steve, you raise a good point, because clearly this is a proposal that throws a lot of things against the wall. I mean, with transportation aid, there's no sacred cows here.
What about aid on student management systems? Because in the regional information centers, we also support that.
It's interesting with that obviously could be viewed as more instructional, and especially with testing data and all that. So those are details I think that would, hopefully it's not a path we cross, but that might be even in the regs and how the SED goes coaster by coaster through the law.
Yeah, I think that's what is happening now, because everyone's had a chance to take a look at what was written in the Article 7 language, and they could see what was there, and then questioning, how does this particular service fit within those categories? I see a question here from that's been popped up: is the business office support mean the financial support services provided by the RICs? And while it's not affected in law, or it doesn't mention it specifically in law, as far as I could tell, these are things that if it ever actually got put into law from as part of the state budget, then SED would then be making those determinations about, again, going program by program, coaster by coaster, and looking and making those decisions on this. So unless Anthony and Steve disagree with me, we have to look at this thing as being...
It's definitely at risk. I think you definitely have to argue that it has to be brought up how many districts are in these services, and how, it's how disjointed it is to have a $250 million pool for districts to share services, and then take the mechanism where they're sharing services and decimate it. So, it doesn't seem to make sense.
I agree.
One thing good with this, it doesn't. I just found the language in the bill, and it doesn't say including but not limited to. So it lists the specific items in the bill.
Well,
so
I guess
that's good.
In terms of the way that the language is written, I think that's fine. I'm just not. I think that the business officials who've mentioned these questions here are still going to force the issue with SED to redefine or define
and determine
where these things fit.
What does this language mean? Which coasters does it apply to?
Exactly.
They will have to determine that.
I know that I've had a couple of people. I know that some of the BOCES business officials are going through with and the exercises with SED to try to go coaster by coaster, and I know that exercise is taking place, and it doesn't look good when I've seen some of those things come out. So, we need to be aware of that and be able to again, now we turn to advocacy on this, because, again, this is the executive budget proposal on BOCES, is to be able to demonstrate what the impact of this is going to be, not only on the BOCES, but on the educational programs for the schools and that they provide services to. I think we have another online call here.
We do. Our next question comes from Arcangelo and Company. Caller, go right ahead. Oh, one moment.
Will BOCES support for shared services transportation, joint transportation, be cut?
Both support for joint transportation, you mean like
Yes,
I think at this point, pretty much transportation services don't get BOCES aided. They get their transportation aidable.
Yeah, I don't know if that falls under this category we're talking about.
No, that would not be. Handicap services from BOCES, that's aided through the special ed formula and transportation.
There are things like BOCES driver training, and I think if you do contract transportation through BOCES, rather than a commercial provider, if you don't have your own bus fleet, those are aided on by transportation aid. They're not BOCES aided.
Okay.
And those would seemingly still be in place,
Yeah.
still be transportation aid.
Things that are transportation aid eligible, that wouldn't change.
Okay, we're taking a look at some of the chat questions that have come in here to make sure we can address them. I'll just kind of work through down the line here. Is what about NARIC support for software systems, school tools, school management systems, IEP Direct for special education students? Is this non-instructional? Steve, have you gotten into that level of detail, or is this something that we're going to is going to basically be up to SED to decide if this
I think
gets put
it'll
into...
be up to SED what is covered by that language in the bill.
Yeah.
And I think part of it will be even beyond just their interpretation, if it actually happens, what is the legislative intent too.
Yeah.
Right.
Yeah. I mean,
You could sure make the argument those are instructional support.
I think those, obviously, they seem to have much more of an instructional support.
Yeah.
So
I mean, from speaking on behalf of ASBO, I can tell you that if we ended up having a list of these types of things and be able to go through them, is that these would be academic, and that even if we could get beyond some of the other management support types of things that are in here, that this clearly goes beyond, I think, what the intent of the law would be on this case.
it would seem to.
Because IEP Direct and whether it's special education or speech therapy or the other types of things that are classified through here, we don't have a quick answer from SED at this point on this, but I would think that it would be something that we clearly argue that would be outside of the types of things that they're trying to address here. Okay.
We have a question that says, if the state reduces BOCES aid in 12-13, will the lessened GEA will the GEA essentially be reduced in 12-13 with the money that they save for BOCES aid? Good question. I'm not sure, but the bottom line is the way this reads. In 10-11, GEA was a one-year thing. What Governor Cuomo's proposed is that a GEA of some sort will continue into future years.
Yeah, but interestingly enough, I guess that'll be just the impact of personal income taxes. That'll affect that GEA the way it's written now. So the actual aids are kind of locked in place to what it is, right, in 11-12 on that run.
Yes, for now. It would be locked on the run, and GEA would be frozen at what's on the run. In the future, there will be a GEA, and I think what it comes down to is he's also talked about the growth in school aid or coming back would have to be I think these eventually tied to personal income growth.
Yeah, I think that's the bigger thing. I don't know if they're actually taking a look at where cost savings would be achieved in certain aid categories, and then how that would affect the GEA. I think they're taking a look and saying, okay, well, we want to constrain the growth in school aid based on some objective constraint that we can, point our finger at. And I think that's that you're either looking at the growth in income, or you're looking at some version of the CPI as that goes forward. Yeah. So, as far as I know, and conversations about this, is that they haven't really been sophisticated enough to take a look at how they're going to link one aid category to and savings to a GEA over time.
Yeah, but the fact there will be a GEA over time is in is
Yeah.
clearly the way they're thinking. And it's
Oh, no,
gonna
there's
be
no
here for a
question
long,
about
long
it. I mean,
time.
they have written that language that that they do, over the next several years, is that it's going to be limited.
Yeah.
And that it falls along that line of, well, we'll allow, we will allow, foundation aid to grow, to meet the, to meet the needs of the law and in court cases, but, on the other hand, it's, it will take out of the other pocket through GEA, and we're going to build this in over time. And, based on the rhetoric that the executive has used, that it's either going to be based on some kind of growth in income or tied to some kind of a CPI cap, and so that the GEA would cut back any growth on the that would keep it in check for what the state wanted to do. Let me take a look and see what's coming here. How about BOCES rent and capital charges?
No change, right?
I didn't think so.
I'd have to go look. I don't think it did change, but it's always aided on a current basis.
And even administrative, right? Really no change in that part of the aid.
The administrative is aided now on either the RWADA or I think it would be on the state sharing ratio for administrative.
Yeah, that would be the one change, right? But the service itself
wouldn't change. As far as, I'm not sure about rent and capital. I'll try to look and see if I can find something on it.
We have a comment here from Michelle Trainer, which says, "But isn't this a contradiction to the governor's statements that schools need to share more services?" I think I think we touched on that a little bit, but relative to the commissions that have put out reports, and I think a relative understanding that BOCES has a fairly significant role to play in allowing districts to share services, and that it's an efficient way to go. I would say that absolutely. And that is probably the biggest advocacy point to make about this, is that this was somewhat of a surprise for those of you that were around, when Pataki kept putting his budgets out and hammering on BOCES. That was one thing, but now with the commissions talking about sharing services, that it is somewhat hypocritical to do this, and that's part of the advocacy effort. Just again, looking at some of the questions, some of them tend to be somewhat specific. If anybody has seen anything about this, and you can call in and provide answers if you have them as well. But what about nursing services?
It used to be a direct service to children, so again, that's normally aided through special education funding anyway, as a related service. So, what's your thoughts, Steve, on that?
I wouldn't think nursing would be included.
Yeah, I think it's outside of the rhetoric on management. But again, we won't really know until, or if, these proposals either gain a little bit more steam, or they tend to fall out as a red herring in terms of focus of what the real budget things is. Say, okay, we'll throw this stuff away from the executive. We don't really know if that's the case or not. But as it gets if it does get more serious, then a lot of these questions are going to be in the hands of SED, and the pressure is going to be on them for us to be able to push them. Comment written here: I find it interesting that the CBO is on the block. The governor has a point. The cost of the CBO is often higher than running your own operation, not including aid. It is not a cost saving standing on its own, and the rules, as the rules stand now. CBOs make one look good by reducing cost on paper, moving staff to BOCES, and describing it as a cost, as a contractual one. Not all the governor's proposals are all wet. This is one that, I would, if Jamie wants to call in and have a conversation about that, that might be something we might want to talk about because I got to tell you that as we look at these governor's proposals, one of the things that we have to be able to do as an association in working with the Council of School Superintendents and school boards is to be able to kind of separate what makes sense from what doesn't make sense, because one of the things that we can only hang our hat on is the degree to which we can verify numbers and data and have people providing some kind of testimony to us that say, here's what works, here's what doesn't. The CBO, I know that we probably have a mixed bag among people who work, either participate or work within CBOs, that they do stand on their own. But I think this is probably a big crux of an issue of where we are and what we have to say about, is this something that's cost effective on its own and something that either with or without BOCES aid is the right way to go as far as district efficiencies. So not if you don't want to type it in here, but it's something that ASBO wants to hear more about, because they are they're in many parts of the state, as you well know, and I think the circumstances upon which districts got into the CBOs and what services they use could change the attitude toward whether the governor's proposal is all wet or not. So I think this is one, if you want to continue to write your comments in, which we will collect, and the association will continue to take a look at these things. Okay, I think we've talked enough about some of the chat questions that have come in on this. Wanted to talk a little bit about building aid, and that building aid will modify a formula to eliminate 10% as well as other selected aid ratios. That would go into effect.
It says in their capital projects voter approved on or after February 1st, 2011.
Right. So it's prospective projects that would happen. I know that there has been a lot of discussion about whether this is something that makes sense or not. I know that there's a firm belief, not only by a lot of school districts, but by people in the capital as well as in SED, that the incentives and the selected aid ratios have been off the mark in terms of efficiently providing districts with the resources they need to keep their facilities up and running. I mean, I think that one of the that Carl Thurnow and SED, one of his big comments was that when this came out it wasn't looked like as we could save money on what we really need to do. It's we could do what we need to do and buy another half of it on top of it and do more than we expected to do. And I think that the recognition there was one that it's certainly understandable on the part of the school districts to maximize the state funding ratios and do as much as we could. On the other hand, there were districts that still couldn't afford to do that, and now they're looking to try to scale back on building aid by taking out some of these incentives on prospective projects. So that's one piece, and that's the ratio piece. What they put in now for future years is that building projects would be subjected to a multiple tier priority list, where there would be a rationing process based on I wrote in a questionable tier system, because I think that anybody looking at the Article 7 bill would say that we could find some fault with what's in those tiers to determine which projects would receive funding. So they have a 6-tier system that would start with things along emergency types of building projects that would have to be taken care of, age of buildings, right on down the line. as a way that they would look at funding future building projects. And this is something, again, it's a way to scale back or turn off the spigot somewhat on the state's requirements. But again, within this, there may be a way that it makes some sense to look at what the real needs are of a school district and create a system going forward that makes some kind of sense. So I would like to hear, comments based on what you're looking at, your building projects, and you're looking at this particular proposal by the governor to see what you have to say about it.
I would think operationally, unless you have a health and safety project, it's going to be almost impossible to estimate the tax impact of a proposal, or make it very difficult because you wouldn't know if you're going to get even any compensation, depending on who else was in the pot that year and what their general wealth was, because there's also within the tiers a ranking based on the need of the district. So what's your thoughts on that?
Yeah, this is going to be interesting. This proposal for the tiers, it's like George Pataki has come back to life. He did something very similar. It's almost exactly, not completely tweaked here and there, but pretty much the same to do this tiered system. The interesting thing that we saw in the bill is it says like a maximum would be $2 billion worth of capital construction. Mm-hmm. Our program director, Michelle Levings, actually talked to facilities, and they said that's about the level they approve in a year.
Okay.
So it's kind of interesting looking at that, but I'm wondering if it's a way to start, and then maybe they'd say they'd pull back on that over time, or I don't know, which is kind of interesting. But it looks like like a tiered system. But I know other states do that. They actually do have things where there's only so much that they will approve in a year and provide aid for, and it does go into a priority.
Yeah, one of the comments that we had when we met with facilities planning and management services last week about this, and again, recognizing this wasn't their proposal, this
right.
They're reacting to what the governor had put out there. They have a couple of concerns about this, which I think districts ought to know about, and one is the fact that that any triage type of system that they have to administer is going to be very difficult for them to do at the same time when they're looking at 10% cuts in the state workforce. As you all know, is that they, with the engineers and the architects they have there right now, that they struggle with getting through the projects that they have on their desks without having some kind of a priority system. They just look at them based on, whether they're eligible, and they try to look at these things and get them through, and they still have a backlog. And they are very concerned that what this would do is that if they are required to then create a triage system, that it would create backlogs even higher, given the fact that they may be actually losing staff. One of the things that we have suggested over the course of time is not really it's not really a triage system, but it's something broader than that allows, to the extent that they can be, the building and condition surveys and the upkeep of facilities that somehow building aid would then not be would be somewhat more of an entitlement that districts understand how much they have to spend on their facilities over a certain period of time. It would be up to them to decide how much on maintenance and how much of the state money that they would use to keep their facilities up. I think that's still a long way off. But I know that SED is really giving a pushback on the ability for them to administer this type of a system. They can't say they can do it, and so just basically on its own weight, this may be something that is unattainable. But the idea that the state wants to be able to take a look at what the most the projects that are the biggest priorities and address those first. I think we can address those things on its merit. And if we can create a better idea for how to deal with that, I think that falls back into our court. I know we've got a bunch of things here that people have written in. Steve, you've been taking a quick look at some of this stuff.
A little bit. Yeah, some of the things on building aid, like ranking projects. I know it says in there, like if you have a previous project that didn't get funded, it stays in the queue, and it would be considered. But it would seem to indicate that if others come in that are very, health and safety, things that are critical in terms of the building condition survey they have to get done, or overcrowding because of crowded facilities, probably those would just continue to go ahead, I would think. But it's hard to, it would seem to imply that.
Yeah,
I don't know.
Yeah,
but you don't go off the list. You stay on a list.
You stay on the list, but you can keep getting bounced.
But you could get getting bounced down
to the back of the line. It's if you look at it being in the supermarket and you've got 9 items and you're in 10 items or less, and then somebody keeps walking up and say, well, I've got one thing and I really am in a hurry. They keep taking you, and you end up basically standing there for a while. It may be the same kind of thing that happens if this system gets put into place. And, don't forget, the reason that they're suggesting to go to this type of thing is that they want to make sure that they're addressing the facilities that are in the worst condition around the state. And there's a recognition that the 10% incentive didn't address didn't address the facilities that really needed it. And again, I go back to the comment is that districts, to their credit, because it was a sophisticated financial move, is to say, well, we can do twice as much now with the same amount of money, rather than saying, okay, well, we'll still do what we want to do, at a cheaper amount.
Right. And interestingly enough, in the past, the governor has said, well, effective July 1st, we'll make these changes. But he made a point of saying it's effective immediately because he didn't want one last rush in under a previous.
Right. That's for the selected aid ratios and the 10%. Right. They would go away immediately.
They would be
for one of them's July 1st. The aid ratio is for this priority system. Yeah.
Approved after July.
Yeah.
Right. Right. So that was the one way. It's this in future years. This issue of
queue and
of creating tiers of priority and that kind of thing.
I did see also something else here in the questions. It was about projects going forward and things like turf fields and incidental cost allowances. As we read this, it appears it would change the cost allowance structure so that a project, the incidentals can't be more than, for elementary, 20%, and then at secondary, 25% of construction costs. So that would certainly limit things like turf fields because they have to they're all site work and they all come out of incidental costs for the entire, dollar amount of that. So what it seems to be like now, the system runs now where if you do renovation reconstruction in the building, you are assigned a cost allowance for renovating the entire building, and an incidental cost allowance can be in the millions of dollars tied to that big construction cost allowance. You can now do things like you could do $50,000 worth of work in the building, but tap the big incidental allowance that would be tied to renovations of the entire building. So it looks like it's trying to close that off by changing also cost allowances and how big the incidentals can be.
Right, and I think that we understand why they're making that recommendation because they have certain concerns about some of the things that have been included in those incidentals for those types of projects. We have pointed out to them that what we hope that they wouldn't do is that the incidentals that are not what SED would consider or wring their hands over, such things as parking lots and these types of things that are need to be done every once in a while, that's not something that would be thrown into this category and eliminated from incidental costs because you really need to do those types of things. The things that are necessary, parking lots and improving parking lots, as opposed to looking at something that may be somewhat questionable that SED has a problem with rolling those into athletic fields. So we've mentioned on several occasions is that we'd love you to be specific and say, tell us what you don't like and what you're going to exclude, and then everything else is okay.
Right.
But they've always seemed to be somewhat roundabout about these incidental costs and coming through the back door on them. And so that's one of the things that we've talked to them about is being more straightforward about some of that stuff. But, again, that's part of the advocacy piece to try to make some of this make more sense for districts and what they have to do.
I notice we have a question here about the sale of a building. That also comes up as well in the proposed bill. What they're saying is if a district sells a building that is being aided at this point in time, and there are outstanding projects for that, they will take what was the approved project cost, or the cost allowance, whichever was less, that they used to determine the approved cost of the capital project. They would then recalculate building aid by reducing the approved cost going forward for that project by the amount of the proceeds from the sale of the building. Good example, let's say you had a project, let's say that the approved cost that then they amortize over 15 years was $5 million. Let's say you sell the building and you get $2 million for it. They would then reduce the approved cost that they would aid going forward from $5 million less the $2 million down to $3 million. So if you sell a building, yes, you would still get building aid, but what they're calculating the base they're calculating that aid on would be reduced by the proceeds of the sale.
So there wouldn't be a take back; it would all be in futures.
It appears to be prospective. Yeah.
Yes. Yeah. Yeah, that's the way I read it too. Also.
Question here: How would you determine the taxpayers' impact prior to them voting? If you're not aware of the project's fit into the particular tier within a particular year, and I guess we just talked about that a little bit.
It would make voting on something very difficult without knowing whether it will be aided or not.
Right.
Here's the range. Here's the range. I guess is what would start be happening where you'd your building aid, fully aided project would be one part of the range.
And if you're stuck in a tier and then other projects come in, and it would be very difficult to be able to be, and we understand what perceptions are and what they mean for districts going out and essentially having credibility with their voters. And if you go out and say, okay, well, here's our project, and we're just waiting for SED to be able to approve it, not knowing if what tier and when we'll hit the top of the list. Can be problematic just from a public relations standpoint, but it also is a problem from planning. Are we going to be able to do this, or are we not going to be able to do this? And really, it gets into philosophical discussion about is the state, should they be in the position of doing triage and rationing the state's money for projects that voters seem to want to have in that particular district? And it has become clear now, and the way the state has been going over time, is that, they would really like to be able to do that because then they control how much money they spend.
Yeah.
They know what the pool is. They know that they won't go over their pool. But it's really kind of a pushing down to the local district decisions that, and particularly for those districts that don't get much aid anyway, are the ones that still might be holding to a small amount of money and might create uproars. So that is a consideration when you look at how this in future years, how these tiers would work and how it would impact on different types of districts across the state. Okay, we talked about BOCES. All right, the Gap Elimination Adjustment. This is something that functionally isn't really no different than what has happened in the past. I think, other than the fact that the state they cut with certain exclusions for building aid and others, that the Gap Elimination Adjustment is really where the cuts actually take place. And this is one of the things that I would like people to recognize and to be able to share what the equity issues look at for the Gap Elimination Adjustment. Because despite the fact that the formula for the GEA has wealth adjusted, all these types of things, when we've looked at the impact across the state, that it is really a disequiting piece of this, and that this is one of the areas I think that is probably the area that, as far as what we need to advocate for, is front and center, because this is where the money is, and this is where the cut's coming into place. So, we would like to hear more about this from you, and I'll also hear what Steve and Anthony have to say about how they've looked at what the overall apportionment of and how this GEA is spread out over districts, or have you call in or write something to us about this, because this is making up for a lot of the stuff that federal money. It's the overall budget cut that the state was looking at to get out of education, did it right here, and they plan on doing it and keeping it in the future. So, here's something that I think is probably the biggest area of school aid cuts as you see them. So let's take a look and see. Excuse me.
I think there's a transportation question, which we can. There is actually a transportation question. It's about it's about buses. About buses would have to be able to get aid on a new one without a waiver from SED, from the commissioner. Buses would have to be 10 years old and have 120,000 miles on them before you could replace them. What we were trying to say when, and best we could determine, is that it was something that took effect when the bill takes effect.
Yeah, it would be whenever they pass the.
Whenever they would pass the bill. Basically.
Yeah, if in fact that when they pass the budget that's still in the bill language when they pass it. What I'd like to do is open the phones up right now and see if anybody wants to call in with, because what I would like to hear is what you might have to say about your own experience with looking at what the GEA is, and letting us know what the impact is going to be, because even though it's quote progressive, it is going to be a problem. Michelle, you got somebody on the line?
No one just yet. Again, 7 pound on your telephone to be placed on.
Okay.
We have another question about buses. If the bus is purchased for a new run, is it aidable? I would think probably they have in here basically that districts are supposed to adopt efficient practices. So basically, I think part of that is going to be computerized bus routing and making sure buses are well utilized, and SED would look at that. But I would think probably if you have enough justification that a district would need a bus for a new one, not a replacement, because of additional transportation needs or students or runs or whatever the case may be, I think that would probably one of those cases where you could potentially get a waiver from the commissioner.
Yep, I agree with you, Steve. I think that's a good way to, at this point, we'd have to view it as. Have you looked, has your office been able to look at the shares impact of the Gap Elimination Adjustment?
We've looked at it some, and I think we're kind of amazed at how deep this goes, because it does even bring down what I would consider certainly not wealthy districts that are down in being, the 50% of state average wealth range. And they still get very hefty cuts from the GEA. And I think the reason for that is essentially that they're cutting so much money from school aid that to get enough, they've got to go into taking major dollars from districts that are very much aid dependent. I think the bottom line is very wealthy districts, the state aid does not make up a large share of their budget or their general fund expenses, and so you take even a larger percentage from them, it doesn't yield enough money in the dollars they're trying to save.
Right, and
so it has a huge impact, and it seems one of the only ways someone gets mitigated by this to some extent is if you have your high need, in the sense it takes of you formula-wise if you have a very high percentage of free and reduced price lunch eligible students.
Yeah, I think those are the only ones that if you look at when you start to categorize, the needs resource groups that SED puts out, is that those are the ones that I think make out a little bit better than others. But clearly, it's it's showing much more of a burden in some of those rural high needs districts that are high aid dependent and frankly have low tax bases and no place else to go for this stuff, and that's why in the culture of an impending tax cap makes it even that much more difficult for districts to survive. I just want to read a question here. It says that does the GEA unravel the Campaign for Fiscal Equity lawsuit and regress poor districts back in time before the foundation aid formula? That's actually that's a question that I think is going to work itself out over time. Yeah. When you look at what the governor has proposed, he says on the one hand that he is allowing full implementation or full funding of the foundation aid formula by, I think it was 16-17. Yep. That they were going to increase so they were going to unfreeze it and implement the foundation formula at that point.
And it'll start going up on it, 13 or
it'll 2 years from now it'll start going back up. Mm-hmm. In according to the state's financial plan. But on the other hand, they've also saying that we're going to leave the Gap Elimination Adjustment in place at the same time. Yeah, right. So it's going to be very interesting, and it was something I referred to earlier, is that, you'll give it to me here, but you're going to take it out of my pocket on the other side. How the courts might look at that, and how they craft the GEA over time, maybe to protect those districts just because they know this lawsuit's coming. But yeah, I mean, that was the first thing that struck me when I read through the executive budget documents to say, okay, we're going to fully fund foundation aid, but we're also going to implement a tax elimination adjustment over the course of the next 3 years at the same time. Be very interesting to see how a court would look at that and not rule that you basically you're committing a sham on the school district children and the taxpayers in the state. And
already, I mean, considering it's this GEA of $2.8 billion, that rolls back a lot of the increase that was put in under when the 2 years that the foundation aid formula ran and started to be phased in.
Right. I mean, take that into consideration is that we're so far behind where we should have been based on that is
I think part of it too. I think the other side of this coin is that a tax cap is very disequalizing. Depending on the value of real property in a district, there are districts that can raise hundreds of thousands of dollars by increasing the levy 1%, and there are districts that will raise a pittance by increasing their levy 1%.
Well, what we would like to do is, after we talk about some of this budget, is then do something very similar to this, just focus specifically on the tax cap. And what the issues are related to it, what districts are planning to do, and to educate not only the association on its advocacy point of view, but also to have a better idea of what districts are going to try to do or have to do with this. And that also goes to some of the comments that have been made now, not only by the executive, but by the State Education Department more recently, about the fact that there is enough jobs money left over, and that the reserves are sufficient. Is that districts actually have a big pass on this one, which I think is a wide sweeping statement that doesn't take into consideration what the real circumstances are in most districts. I think there are districts that may be in those situations, but I don't think that there are enough of them to warrant the comments that the governor is putting out. And we're starting to collect that data to show what they are, and we're working with our partners on it. But I think that's the next go-around on this, is really to address the issues that the governor's talking about with respect to, districts can pay for this stuff. Not to mention that basically they pay for it with 1 year, and that the GEA would be in place for multiple years.
Mm-hmm. Right. Well, it kind of comes down to the basic fact that when you use non-recurring revenues, when they're gone, they're gone.
That's it, and that's exactly what the suggestion is by the executive, is, use your one-shots. Use the money you've got sitting there, despite the fact that you may actually have been using or have planned for using these things for future liabilities. But spend it now because you got it, and that's one of the things that we're trying to document the best we can as we walk through this budget mess.
Yeah, somebody also mentions here like a 16% cut against the aides affected is very different for a district that's 60% of state average versus somebody that is at state average or greater. And I would say, yes, I agree with you 100% on that. There's not much you could say other than that. Amen.
Yeah, right.
Also, there's a question about, since it's here, with the proposed cap on the tax levy cap, the way the bill is written, it would affect the 12-13 school year to be the first year with a tax.
Yes, that's
not 11-12.
Right, and that was the one difference from what the governor had initially proposed and what the Senate initially passed last year before they left for the summer. That was one of the changes to that bill. That made it effective in the following year rather than in the current year, and that was the one, the one thing you could look at and say, okay, well, I guess there is something there that we could look at and say, okay, they made address this in a fairly understandable way, but I think next year is going to be just as problematic if they have these GEAs going forward, and school aid will continue to drop. Now you are, and there's so much in the language about the tax cap, the 2%, but it's really, depending on what the calculations are, probably going to be less than the 2% cap. That it could be closer to zero if things hold up. That it is, we're in for, if it gets past a couple more years of, before this really has an impact, but it's going to be a significant impact.
The 2% STAR cap, although I guess that'll start in 11-12. That change in STAR reimbursement. We had an earlier question on that. I don't know, Steve, if we want to just quickly broach some of the cost shifts we had kind of talked about when we had started our discussion today.
Yeah, I would like to, because I think that's even for the most diligent reader of the education bills and those kind of things may have missed this because it's not in the education bill. But if Anthony, if you would just talk about the non-resident stuff and other cost shifts that are there.
Yep. Well, I'll speak to two, and then Steve, please jump in. But we were talking about the 4201 schools. There's 9 of them throughout the state. Actually, a larger percentage on Long Island. Among the names are the Cleary School, St. Mary's out in Buffalo, come to mind, and they added also Henry Viscardi to the list. Currently, the state pays those tuitions in full directly to the school, and then there's a basic contribution back to the public school district. And basic contribution amounts could be anywhere from $3,000 to $7,000, $8,000, because it's your tax levy per pupil. This would go to a full district pay beginning in the 11-12 budget, and aid would come for those placements through private excess cost aid, but that wouldn't start till 12-13. So really it's going to be the full benefit to the state in 11-12 and the full hit to the school districts that year. In addition, buried in another Article 7 bill, as districts know, a few years ago, districts became responsible for 20% of the maintenance costs for certain residential placements, special ed placements. That would, basically the state would, right now it's county, state, and school. The state would get out of paying for that, and it'll be approximately 60% will be district's responsibility of that cost. And my understanding that'll also start in 11-12 placements, so the budget you're putting together now.
Yeah, the other one, too, that is, I think, worth mentioning is that for summer special education programs under Section 4408 of Ed Law, right now the uniform reimbursement statewide is 80% state share, 20% local. The governor is proposing to, again, go to a state sharing ratio as an aid ratio. And what this would do is it would also, well, it would raise the maximum a district could get. If you're very poor, you could get up to 90% state share, but it could drop under the ratio. The local share could, go to as high as 90%.
This was
with a state share of 10. So it was similar to something that was there last year.
I was going to say this was out there last year, and I think this was an issue that really hit Nassau and Suffolk districts. I remember looking at their data, and that those they jumped from 20 to way up on some of these types of things. And so again, this is one of those areas that I think that if they're sophisticated enough, they did it once, they looked at it this year and said, okay, well, we're going to do this again. And I expect that legislators from the island and those areas are going to be hit harder, are going to jump all over this one again this year because they understand it. Doesn't mean it won't happen, but it's again, it was one of those things that didn't show up readily when you read the education piece of the Article 7 bill.
Also, another kind of a detail that could get lost. The impact of the freeze-on database, if each district should look at their public excess cost aid and private excess cost aid on the runs for 10-11 compared to 11-12. If you see your 10-11 figure in those categories much lower than your 11-12, that difference is probably how you're impacted this year from the freeze. And through no fault of the districts, there's an inability of certain aids to be claimed, especially high-cost placements at BOCES because the AVLs are not produced. And if the goal for the state is budget surety, it seems like there needs to be a transition year where the stack calendar matches the state aid calendar. But again, this could also has a downstate impact because a lot of these higher-cost placements could be down there. But I'm looking at some districts where it's $1 million or more.
Are you talking about the balance? They haven't adjusted for the ones where the approval placement's over $85,000 a year for.
Right. So I'm just saying, even the most diligent district in the world can't claim certain aid until March, April, until those AVLs are out and returned under the current stack calendar. But as far as if you want to see what the impact is on your district, if that high cost aid and private excess cost aid in 10-11 is a lot less than 11-12, because they're keeping the 11-12 as the historical amount that's been, kind of trending. So they're actually putting enough money in 11-12, conceivably, but 10-11, you'll. Yeah,
10-11 is based on what was shown as payable on the November database.
Right.
Everything that hit the system before November 1st, 2010. And the thing is, if it's a very low number, and in prior years you were much higher, and also 11-12 is much higher, it probably indicates that as of that November database, stack forms either had not hit the system yet, or maybe the district had not even submitted them for the 09-10 school year to drive up the public high-cost number.
Yep, or you got a lot of these BOCES, high-cost placements that you just couldn't physically get in.
Right.
No one can. Yep.
Well, we are a little after 5 o'clock, and one of the things I did want to say is that we do have a record of all the questions that have been submitted here, and what it is our responsibility of doing this is to go back through and look at the questions that we've received and to get answers back to everybody who submitted something on the chat. So we will make sure that we do that and get those back in a reasonable amount of time. I would suggest to everyone that we are just beginning this process of advocacy and and looking at what the impact is going to be here. We didn't get into a lot of questions about the issue of the rhetoric of reserves or jobs funding. What I hope to be able to do is have a round 2 of this to talk about those types of things over the next couple of weeks, as well as kind of the political implications of where the tax caps are going and what they are. So I want to thank Steve Golis, who is here with me from the State Aid Planning Service at Questar BOCES, Questar 3. Thank you very much for sharing your insights and doing this, as well as Anthony Kashera. And Anthony is with School Aid Specialists, who focuses on looking at aid and revenue and budget issues for school districts across the state. Wanted to thank Anthony for sharing his thoughts about as he's read this and looked at some of the data. Also wanted to thank Eleanor for being here earlier, for talking a little bit about the STAR issue, because this is kind of one that was not brought out real well. And again, if you have more questions, please continue to submit them, because we want to know what's going on and want to know what you think. And we hope that through the kind and generous sponsors that I went through earlier today, and you saw their ads, that we're able to provide this at no cost to anyone. And we want to continue that approach for anything that we're dealing with policy, and keeping you up to date on what's going on with what's going on with the state. So I thank you very much for your participation this afternoon. I thank Steve and Anthony and Eleanor and all of you for being here today. And we're going to sign off, but please keep in touch with us. We're developing our reaction to the governor's budget for our testimony next week on the 15th. So all your comments are going to play into that, so we can be good advocates on behalf of school business officials. So enjoy the rest of your Thursday, and I don't think you're going to get snow tomorrow or into the weekend. So take a breather from that.
Thank you, everyone. I appreciate anyone, certainly that tuned in. And anybody, if you are a member of State Aid Planning at Questar 3 BOCES, any questions are unclear, didn't get answered, I think Steve is going to work to getting answers. You could also just call us at the office and we'll address them.
Absolutely.
As well. Any of the specialists will do that.
Yep.
So thank you very much.
Thank you. Have a good afternoon.
This concludes today's New York State Association of Business School Business Officials webinar. Thank you all for attending.